Welcome to the Payment Shed podcast, the weekly podcast that dives into the big topics, trends, and people shaping the worlds of payments, fintech, and business leadership, with your two co-hosts, myself, Grant Evans, and Justin Hanna.
Welcome back to the Payment Shed podcast. Today we've been lucky enough to be joined by Peter Stuart, COO of Easipay. Pete, thanks for joining us. Tell us a little bit more about yourself.
Well, first of all, thanks for having me on. I have been in payments since about 2018. Used to work for a different ISO, essentially, a long time ago. Learned it, understood it, liked numbers. So I thought, well, I think I can manage with this. Went on my own for a little bit, realised not necessarily the best at working on my own. Found someone I got on with, paired up with them, and then we grew Easipay. And that's it, really.
And your path has really kind of simplified operations and customer trust. Can you just tell us a little bit about the journey that led to the foundation of Easipay? Yeah,
I think that one of the common things you have when you're an ISO or a broker or just generally selling almost something that isn't yours, but it is giving somebody what they need rather than just slamming down something down the throats and just saying, go on, smash and grab, sign this, see you, and move on sort of thing. So there's definitely a gap still now, even needs to be bridged with the service side of the sell, really. So then with the card payments, we then realised, well, by saving people time and money, we can add other products to it, which sort of makes people stickier and give them more service, make their lives a bit easier, saving money where possible, and just sort of bridge that gap between spending 2 hours on the phone on hold to somebody to speak to somebody offshore or wherever, just close that gap, really.
And you're obviously the COO. How important do you think the operational side of things is when you're, working towards building and scaling a really reliable payment solution or solutions business?
It's massive. And I think that sometimes when we've grown massively, but at a very, very fast speed. And along the way, operationally, daily, weekly, monthly, you just see something else that needs to be done. And the pain about growing too quickly is that something always falls short. So then now we're at a stage where we've grown so quickly and we want to level off, make sure everything's aligned from the customer service to the loyalty. Because what happens is you're selling, everything's going and you're growing and everything, the metrics are all fine, you know the numbers, but then you just forget about something. And it's not because you don't know about it, it's just because you're prioritising getting the revenue in to grow the business. And then now it's just leveling it off, making sure the service is all right and just keeping everything sort of in line with where it needs to be, really.
How much have you leveraged technology to sort of help your team with that?
A year ago, I would say we're genuine dinosaurs. Even at a decent sales volume and a decent sized business, in terms of tech and support internally as well as externally, we were way behind, So even from how deals were being processed or boarded and things like that, was just so far behind. We're a lot better now, Salesforce, and we've got a lot of support with all the systems for the guys, but the focus was on the selling side of it. So how can we get more sales and cross-sell products through using technology? Whereas now it's more like, how can we service our customers through it? Are we making sure they're getting notified about any changes and things like that, rather than things changing on terminals or devices or upgrades and nobody really knows what's going on. So it's used more of a communication tool now.
It's that true startup mindset though, isn't it? Right? You want to grow the revenue, you want to build out the sales team, give them the tools first, help them to grow, get some money in the bank, and then you worry about the operational stuff.
Worry about the poor 3 people in customer service serving 50 sellers. And then you're like, no, I think we probably should need a few more there.
It is that chicken egg situation, isn't it? I think we've all done it, right? When you're in a sales team, it's fantastic because you kind of win at all costs. And I've seen it where businesses go, we need to employ an account manager or customer success, and then you've got someone else, whether it's in finance or whether it's on a sales perspective, commercially, going, let's just win more deals first. Then all of a sudden your sales team are doing their job, which is great. And then they start asking questions, and your sales team, of whether we like it or not, sometimes go, well, I've done my job. I've sold to this customer. They've signed the contract. We're all live. We want to start seeing revenue commission. But actually the everyday operational transactional queries, chargeback queries, whatever it may be, needs to be answered by someone that's going to give them the time of day, right?
Yeah. And I think it's when you're dealing with a lot of, so we initially used to target, because of the other products that we sell, we used to target sort of new businesses, if you like. So, they were being serviced daily. The data team were managing that side of it, and we were selling loads and loads and loads of products and terminals and whatever else. And then, they've got so many other things to concentrate on when you're opening a business. That first few weeks is like the most important thing, knowing exactly how this new device that you've got is going to work and making sure you've got that point of contact. So, I would say that, early days, we probably lost a fair chunk of customers just because we weren't able to service them. And that's where now we're almost going overboard to ensure that even though our volume has gone through the roof and will continue to do so, that we've got the support to back it up, because it's so competitive, the market now. It's almost like, in a bizarre way, more important than pricing, the service that you're giving, because people don't want to change all the time. They don't want to have to do things like that. But that one day where they might need you, if you're not there, then you may as well have never, you'll lose them for life, sort of thing. So
it's really interesting hearing that from the ISO side of the fence, because I think, traditionally over the last decade or so, ISOs, they have helped to move the market forward undeniably, but you could also say with the sheer volume of ISOs that came into market that they drove the price point down significantly, right? But now you're saying we're going back up the other side, and it's things like technology, product, service that even in that ISO world are the most important things, and you can charge a premium for better service.
Yeah, I think there's a middle ground, because I think that merchants, because of the way they're saturated and more people going into business every day trying to sell them something, and some days I'm sure small businesses will have more people coming in trying to sell them something than buying a product, which is the nature of the beast. But so naturally the rates and things and prices are going to go down. But I feel like even a coffee shop or everybody's diversifying because they've got to be different, right? So yes, you'll go, and I went for a coffee this morning around the corner, and there's about 8 in a row. 8 cafes. I'm like, right, you got your Starbucks, you got your Gales, you got whatever else, and a couple of privately owned ones. And the one I chose to go in, probably I would say is what I would describe as overpriced coffee. But I am from up north, so but but it was so clean, and the aesthetic was just different, and they just had a different angle, and it was nice, and it worked. So like
Scandi vibes, or
well, no, it was like, I would say Oriental clean, if you know what I mean, like a nice little wooden tray. That it was all like crisp,
An experience then.
Oh, that's it. Yeah, you can sell it like that. I mean, I sat outside on a bench, not even on a table, but it's. I just think that more and more businesses are having to do different things, and if you're giving them different options, it's just a lot better rather than just going, have that, it does that. These rates are dead low, cool. But how can you make the business better? What can it do for your business, whatever system it is? The e-commerce side is going crazy now. Even if you go to a market, right? I was saying this the other day, if you go to a market stall, people used to just, that's your fruit and veg stall, that's it. But now more people on markets have a shop somewhere. They're just either doing the mobile food stuff sometimes, or, they'll have a shop and they'll do that as well on top. So like now you think, right, well, they've got the same stock at 2 places. You need something there that's going to link up with it. And now they're making these, sort of instant e-commerce stores, so you can scan a QR code. And if you're going home, if I'm going to market, I don't want to carry a load of stuff around home. Or if I'm going to York and I go market there, I don't want to lumber stuff home. I'd rather get it undamaged. You can just order it straight from the QR code home and stuff like that. So there's a lot of changes, but ultimately, yeah, I think that the service side, and you can't rely as an ISO and a broker, to go back to what you were saying, you can't really rely on the acquirer or retaining your customer and looking after your customer. You've got to try and take control, and it can be difficult sometimes because they are your customers, but they're not your customers, and you've got that sort of grey area. But I think that ultimately it's from when you sign that contract, are you, as an ISO or a broker, are you contacting them, giving them a welcome pack, telling them that we're your point of contact us, we'll solve your problem, you're not just another number? Because otherwise they may as well just go direct, right? You can try and sell as many benefits as you want, saying, "Oh, we can't get this deal direct; it's just with us," or it's just nonsense, isn't it? You know what I mean? It's just a poor, weak sales tactic.
It's a challenge for the acquirers as well. Obviously, we've worked for various different acquirers over the years, and the ISO channel is so fundamentally important, but it is also competing with your own sales teams, right? So there is that, you're coming up with one idea as the ISO, the acquirer's coming up with an idea in terms of their own direct to market proposition. So you're competing in some ways with other pure play vendors in the market. Like service, it always comes back to service for me. Like that service element is absolutely vital.
If you're going to be an ISO and kind of start eating other people's lunch, you have to offer something different, right? And it sounds like that's what you guys are doing as part of Easipay.
Yeah, I think that's the angle really. So as an ISO, I've alluded to it, but not really said. So the card payments is the meat and drink, but there are other sectors that will grow with us just as much. Like when we're going into a business, our field sellers, right? I respect anybody who's selling the field so much, because no appointments and stuff, the cold call, just knocking doors, like it's brutal, right? So it only takes a small win to make your day with that stuff. So why give your agents one opportunity to have a win? So if you go in this business, no, I'm absolutely over the moon with my payment system. Like I'll never change. I love it. It works perfectly for me. Then, okay, cheers, bye. Well, no, okay, well, that's perfect. I'm so glad you got that sorted. These are the things we offer, gas and electric, water, waste management, broadband, insurance, all these are the products where I'm not going to push you to try and change something you like. When it does go wrong, we're here to help. But if you've already got them on another product, they're even more likely to come to you when they are ready to change. So you're already there, you're creating a different data pot, there's different angles and ways to attack it. But it's not in like a harsh sales way, it's literally just slowly building a web with one customer, so that eventually the idea is, as long as you can give them what they need, that you've got everything, makes them stickier. It's a bit like the logic with trying to sell somebody an EPOS system rather than a standalone, because there's more commitment there, not just financially, but system wise. You basically, it's why SumUp and Zettel and companies like that, when they started doing the tablet sort of based simple EPOS system or POS system, they weren't bothered about what they're paying, because they're in them, they've got in the door straight away, it's out the packet, working. And then to stray away from that as a new business, if it's worked for 6 months, a year, 2 years,
difficult to leave, right?
Yeah, exactly.
That was a mental thing as well, though, right? You give the EPOS away or give the hardware away, and then you don't charge 50 basis points or 0.5%. You charge 2.5%. But because the business felt that they were getting a big win with this tangible physical thing that sits within their premises, they didn't mind paying slightly more, because they were like, that used to be the expensive thing. You're saying that's free now, right? It was a genius way to go to market.
Yeah. It definitely was, and then now they're the bigger merchants. They will knock it down a little bit, and then they've got it sewn up well. But it's just making some customers realise, and obviously it's perfect for some, but making them realise that that's like the base level of what you could have or what you can do. And businesses, I think next year will be a massive change from sort of basic standalone to a lot more complex systems. Just because of the e-commerce is going mad. If your bills are going up and as a business, and it's harder to always break even, everything's going up, whether you're a builder, whatever it is, costs going up, you need to be able to sell wherever, however, whenever you can. Right? So give the customer every opportunity to buy, to pay. Your gateway is so important, because if you're lazy like me and frustrated when you try to shop for something online, if I can't double tap the side and Apple Pay it, I'm not doing it. I'm abandoning my basket. I'm getting out of there. I don't want to let me check out as a guest. I don't want to sign up to your newsletter. I understand you want to capture the data. I get all that, but just let me pay. And people won't realize or analyze the amount of people and the revenue that they're losing from just trying to get too much.
When we talk about Easipay, then what's that relationship with the Redwood Group and that kind of broader ecosystem as a business?
So the Redwood Group is the original, really. Was a start. Card was done under the Redwood Group, the Redwood tree, etc., with all its things on it. Energy was just the starting point, really. Change of tenancies and general renewals, gas, electric contracts, etc. And then the card just sort of we started the relationship with WorldPay November 2022, and they give the targets in your initial contracts of 30 to 40 devices a month. I think it was 300 a year or something. But it was just the model that they built and the incentives and things like that. We just grew and grew and grew with it. So although we were still doing the energy and started to build in the other products, it just skyrocketed really. So we built that, and it's very weird, because when we're trying to brand things or do things, we decide at the moment, do we easy everything? Do we easy talk, easy whatever, easy fund? Or do we keep it to the Redwood Group, but it seems weird to have a brand that is technically bigger underneath it type thing? So it's one of the things we discuss at the moment, really. So you might see some changes in the new year, but yeah, it's...
Watch this space.
Yeah.
Watch this space. But look, when we talk about brokers, I know we touched on it already, brokers obviously play such a huge role in kind of connecting merchants with acquirers, whether it's WellPay, Elevon, whoever it may be. When it comes to PSR, which is everyone's favourite topic over the last few years, how have them changes, do you think, have impacted that ecosystem?
I think best way I can phrase, I don't think it's positive at all. I think the intention was all right. And I don't think many could have predicted the effect it has had. So for me, doing right by the customer is their priority, right? And that's what it's there for. But by reducing contract lengths to 18 months, for example, which is it's one of the few industries that it has. I mean, we work with them all. We can do 5 years on broadband, we can do 3-4 years on energy, whatever it might be. But to restrict that to 18 months, you're thinking, right, well, the customer's got more flexibility, et cetera, et cetera. But all that's happening is that all the acquirers, all the ISOs, all the brokers have less period of time to have that customer and make revenue off them, essentially. It cuts it by a big percent. So then everyone's panic selling, going low on rates, but then every acquirer is giving a customer a bad experience because whoever you are, 99% of them will change the rates, whether it's every quarter, every 6 months, so they're more than washing the face of the deal. So it's just creating this horrible sales environment when everyone's going in, slagging each other off. You know, I say to our guys, it's really hard as you're growing and getting more people in the business to try and keep a sort of ethos. And I always say to people, hear people, whether it's on the phone now and again or just out, I say, don't tell everybody or tell customers how bad somebody else is. Tell them what's good about you. Tell them why we're good. You know what I mean? I don't think there's any benefit at all in saying why somebody else is bad. If somebody said that to me, I'd be like, well, okay, thanks. You're calling me an idiot for using somebody else, right? So you're slagging off my business. So I'm with X acquirer or X ISO, and you tell me I'm basically an idiot for using them. Cheers for that, you know? So I think it's really important that the message gets out to everybody that is competing with each other, that stop thinking about yourself and start thinking about the customer, you know?
It's like we've created this issue for ourselves by basically saying we're going to put in some regulations to help merchants, which is great. And I think the thought of it was there. But actually what we have done is then allowed salespeople to get even more vicious.
Did the few ruin it for the many, though? I mean, that's kind of my take on it, right? You had crazy stuff going on with, and from a vendor acquirer perspective, whatever you want to call it, the narrative was the other way around. So you'd have ISOs that were signing 5-year contracts at crazy low terminal rates, getting fronted massive amounts of money from leasing companies and giving the acquiring rate away. And, you know, some acquirers operate on finite margins with their ISO partners anyway. So there were bad habits on both sides of the fence, right?
There's definitely a balance with it. And I think that's some of the logic behind, say, the TID incentives and things like that, is to sort of get that balance and get the control back, which is fine. But I think ultimately, right, customer choice. Not some customers, they don't want to even think about changing something every 12 or 18 months. Like, they don't. It's another thing on their plate. Ultimately, if you're happy and it's been sold correctly as it should be, and it's explained properly and it's transparent, and the customer is happy for X period of time, so be it. But that's where I think it's been done at the wrong time. So this maybe 5 years ago, when there were less options in terms of tech and things like that, probably would have made a lot more sense. But now, most acquirers are getting on board with, right, we need to give a lot of different offerings. They're catching up on the tech, the EPOS systems, e-commerce, integration, APIs, whatever, all of it. So now it's like, if they are standing for a long period of time, they can go with the tech alongside, swap it out, do all that jazz. Whereas the problems were with these long leases and things like that is that you'd have a 4-year-old terminal at the end of it. And if get your phone out your pocket, how many times you change your phone in 4 years now? Most people still do. Oh, new iPhone, new this. Not much to it sometimes, but sometimes there is, and you change it and you want to. So
it's the ease of changing it, though, right?
Yeah.
And
instant.
We talk about the cost of acquisition when it comes to acquiring payments, fintech, whatever it is. To then only have a customer for 12 months to then lose them on price, it's going to be difficult for any acquirer.
Yeah, I have a really conflicting view on this, though, because, you know, I got to this point with mobile phone operators where, you know, I've got this with Free Mobile at the moment. For some reason, their 4G, 5G network, whatever, is in the last 3 or 4 months has just become an absolute shower of shite, to be honest with you. And I've got 6 months left on my phone contract.
The merge with Vodafone, right? Is that what's going on?
No, it was before the vote. Well, maybe there's something in that. Either way, I cannot wait to have paid off my phone early, so the mobile is mine now. I'm tempted to go back to giffgaff though, because the thing I like with giffgaff, I'm going to the USA or whatever, no contractual commitment, I'll just buy 30 quid of roaming, whatever. I could go up and down with the grade of my solution, that sort of pay as you go on steroids, right? That model was a lot better, but I felt I could leave them at any time, right? The signal issues I'm having now, I could just go, do you know what, giffgaff, I'm on a 30-day rolling contract, I'm going to go somewhere else. It changes the narrative back to the supplier to say, your service isn't good enough at the moment, right? You tell me why I should stay with you. Tell me why that's all the support and service stuff and operational things you say you guys are
never
obviously...
leave if it was working, right? Would you? I've been with O2 for 18 years. The only reason I would leave being with O2 is if the service that I've always got worse. It just does its job, and I think sometimes payments is the same thing.
That's the point I'm making, right?
If you're paying the fee you want to be paying.
Does the contract length matter that much in some ways? I think
it does now with mobiles because they up it every April with a certain percentage. And
so do payment businesses, right?
Yeah. So I don't know. I guess there are pros and cons to it. So I think ultimately, right, is the customer should be able to choose, and they can't now. Really, I mean, you don't have options like that. Even you'll find when there were 4-year contracts available or whatever, there were companies that would offer 1, 2, 3, 4 years. You don't get that now. You get 18 months, and they're not even willing, most people, to do 12 months because they need that extra now because they haven't got the customers on 4 years. So it just makes it a bit more sort of dogfight, really.
Is soft POS and pin on glass and things like that changing that anyway? Because it might be that the traditional PED or PDQ machine has a sort of evolution or change, but certainly in small SMBs where they might go to, well, I'm changing my phone every 18 months anyway, so that's always going to be new, and my card payments go through that. What's your kind of take on that in market traders and these sort of areas where you used to have a GPRS terminal, right?
Yeah, I mean, the soft POS thing is not to be underestimated, I don't think, in the next year or two. But I do think that if you're getting soft POS, if you're getting anything other than standalone, like you're being more progressive. So like, however, you'd be happy to have it longer because it's more of a commitment initially anyway. You've obviously, unless you're completely in a rush or whatever, you've done your research or it's been explained and sold to you and this is what it can do and you're happy with how it's going to operate. But what you can't predict is how your business will change, which again comes back to flexibility, but you can't get flexibility with a more sophisticated system that has more cost to it. So that's why I think where the acquirers will win and everyone's trying their best to get as much market of the market as possible is having a system where it changes throughout the contract. All these things, so your add-ons and the new integrations that come, don't charge for them. No bolt-ons, no add-ons. If you've got the system and if you carry that and you sort of like swallow that cost as an acquirer, you're not going to lose people, because if somebody goes, oh, my friend's till can do this, and they're like, right, okay, well, that's in our Q2 of 2026, so it will come. And the good news is your friend pays £10 a month on top to have that integration with whoever. That'll be included because we're just going to cover that for you. And all these things and moving alongside it, then you're never going to leave, are you? Do you know what I mean? And there'll be some where you literally can't avoid some cost to it, you know, where it might be zero integration or whatever, because their cost that they want to charge is too much. But if you can sort of manage that and say, again, come back to service, Bolt comes up on the till, this month's upgrades, this is now what you can do on your till. This is about we you said we listen type thing, and do all that.
I think those value added services, upsells, and how you present them to customers is kind of the next evolution of where we're going. You know, I've seen merchant cash advance presented in terminal devices to merchants, so they could literally get.
I think it's on the dashboard.
Like flashing up saying, "Hey, you guys could have qualified for a 30 grand loan this month." Yeah, but you know, it's how everyone wants something really quick now, right? That, you know, it needs to be in the moment. So if I'm doing my daily report and that flashes up and you go, oh, do you know what, actually, we want to build this or we want to do that upgrade to that room or whatever, like that's capturing them in the moment, right?
Yeah.
Today's episode is sponsored by ISX Financial. Most growing businesses end up stitching together multiple providers to run their payments and banking, leaving them exposed to cash flow, reconciliation, and even security issues. ISX Financial delivers a unified ecosystem with multi-currency accounts, online payments, real-time UK and EU transfers, and global mass payout. Within that platform, Paid By provides pay by bank with real-time settlement notifications, automated reconciliation, and integrated refund management. One partner, one integration, helping your business transact with confidence. You can learn more at isx.financial. That's isx.financial. And a big thank you to the team at ISX for supporting the show.
I think that's why we're like such a service sell, right? Because you can send one of our guys in to a business, or I could go into a business, and although this guy has ran this barbershop or ran this salon or whatever for 15 years, sometimes it takes somebody outside the bubble to come in and say, you thought about doing that? You know, I remember visiting a new sort of cafe bar restaurant that was literally being in the process of being built. I just popped my head in and said, oh, what are you doing here, sort of thing. You can never stop selling. But so he's like, oh, and I'd started like becoming an architect and said, oh, and he said, oh, I'm going to put a window here. And I said, but you can't have people going to the toilet there if your kitchen window's there. And he's like, oh, that's a good point, that. And you're becoming like giving them ideas, and almost like you take a proper invested interest, because you know that if they get the right thing, it'll be really good for them, and then they'll just stay with you, you know. So I think there's a lot more than just going, right, give us your bill. Right, I can save you £86 a month here. Okay, well, you know, that's a good thing. But rather than how much money can I save you, how much more money can I make you? Yeah. Right, that's what they're there to do, make money. They're not running a business to save money on bills. It's a nice gesture and a nice thing. But if I came into your business and say, right, I can save you £1,000 a year, but I reckon I could probably get you 20 grand more revenue a year if you did this.
Yeah, that's a good way of pivoting it.
Oh, right. Okay, well, I think I'll take option B, please.
Talking about bills then, merchant service charges, the interchange, the scheme fees, blended pricing versus interchange plus pricing. What's your take on the market for that? Are we confusing the hell out of merchants still? Is it getting easier?
It's bad. This is another knock on from the PSR, right? So there are probably two standouts, I'd say, are transparent bills, right? Probably WorldPay and Dojo, that for me, but everybody else, or the majority of everybody else, it's just, if you 9 out of 10 merchants, if I say, we'll read out that, what does that mean? What does that abbreviation mean? What's that? You know, they just don't have a clue. So it's just being more and more disguised because of the PSR stuff. It's harder to even access a statement normally. People are changing the way they do statements. So it's daily and it's net and it's not gross and whatever else. And some people prefer that, but it's just harder to access. Everything, all of them, it's like, right, go onto your dashboard, and you used to be able to go download the 30-day statement. Okay, A, B, C, D, E, F, G, I'm paying that. Not base rate, then plus that, and then
it's intentional though, right?
Yeah, I know, but I don't agree with it.
Oh no,
right?
absolutely not.
It really riles me, because what's the point in sort of? I have to be really careful how I say these things, but people are literally out there now selling a rate that is not true. You know what I mean? For whether it's an ISO or direct, like, people will go out there and say, this is your base debit card rate. This is your base credit card rate. Well, that sounds great. Sign me up. And they've technically, yeah. And there can be a fool on the merchant for not, you know, reading. But go back to phones. Do you read all 100 pages on your phone contract?
No, but to pivot that slightly, then, so and I don't disagree with what you're saying in the payments market broadly. There's too many acronyms. Stuff definitely gets hidden. You know, statements. You know, I've worked in payments for over 15 years, and fortunately I have a good understanding, but I'm pretty sure I could bring in someone in my team that's done it for 5 years that still struggles on certain statements.
I've done it for 15 years and I'd still come to you, Grant.
But in terms of like what you guys can do with that, and I'm not saying you should have to do this, but the ISOs that are doing well are almost probably taking that raw form acquirer presentment and putting a box around it and going, do you know what? This means this arrow. This means this. Like, you're helping them to then break that down, so they go, do you know what, you guys help us to understand what the hell we're paying. That's a really important thing to us.
You are right, and it is one of those where it's like, because, you know, if I was in sales mode and I go and see someone with an extremely confusing statement, how are you meant to understand that? You know what I mean? But it is true. And then you go, right, and like you say, you simplify it and then do the maths, and the math is the math. But I think that it's a bugbear, but the MSC stuff is a bugbear for people. Like, you know, when we're finding new businesses, you know, it just needs to be, it's about the customer journey, right? So one of my pains is like, when I see a trust pilot that could have been easily avoided, like a bad review or something like that, you don't get many of them, but they happen. And it's usually because something has not been explained properly, or, the journey has just not been good enough. And I can't remember who said it, and I'm going to try and remember this quote, but it's a bit like, say if someone's giving you bad feedback or whatever, don't listen to the words, don't listen to what they're saying. And it's like, what do you mean? But listen to try and get a picture of how they feel. It's not about what they're saying. It's like when you say something horrible to somebody in a flippant moment, like, it's not really what you mean, or there's something deeper and you need to explore it. So it's like when somebody puts a really bad review about something, and you actually, if you break it down and you contact the merchant, they're just annoyed at something completely different, but they just need something to put. So it's like that. Don't listen to what they say, listen to how they feel. That's the message. Because if you get to that, you have that empathy, it can be avoided completely, because people don't want to be horrible. People don't want to complain. There's a reason for a complaint, and people have different thresholds of it. Some people need a real cuddle and a handhold through the whole process. Other people don't need anything. But that's where the service comes in, because everybody's different and everybody needs a different level of empathy and a bit more help. And that's what you need to be there to do. And if you're not, you get a bad review, you get, that pain point, and you're creating more work for yourself. So if you do it right from day one, then you're halfway there, really, in the whole of retention and stuff. So
you spoke there around kind of maintaining that customer service and that culture throughout the business. Where do you think, from an Easipay perspective, you've been able to really invest into your people to ensure that exactly what you're saying now is what the business does throughout?
I think there's two elements to that, because you've got different types of sellers within a business to support, right? So the message to the sellers to give to the merchant is that we're here to support you. We make it at all times of the day, where possible, 24 hours, to give service at different levels. But also say that, have an understanding that we aren't miracle workers. There's some things that we can deal with instantly, directly. Other things take time, but it's all about the response time. That's the biggest thing. If I've got a problem with anything that I have, whether it be I've bought something online or whatever, I've got a problem, it's all about the response time. It's the most important thing. So I know that if one of you got your phone out and rang our office now, you're through within 30 seconds, which is pretty unheard of nowadays, really. So then the field guys on the road, they give the message, I'm here to support you, but they can't do that all the time when they're selling all day. And often sellers, their strengths aren't, the technical stuff and helping where possible, but it's all about the contact. And they need to know where they're going and who they're speaking to. Stage one, if you've got an account manager, if you call them that, or your field seller, if you've got a good relationship with them, contact them. Stage two, the office. Stage three, the acquirer, or whoever it might be. So as long as it's communicated how you get hold of somebody and how you get an answer, then it's fine. But people don't do it. It's this whole sign a contract. Is your machine live? Cool. See you later. And you just don't get anything after that. But it's equally not just about the seller, or it's the company communicating with the merchant. If you've got a question on that, that's where you go. If you've got a problem with this, that's where you go. So they know clearly and cleanly where they're going. Because the other thing is people will call in and ask about something completely that you can't control, and you've got to explain, oh no, you've got to do that. You're just wasting people's time on the phone both ways. So.
And you guys have scaled massively as a business over the last few years. That's not without its challenges in terms of maintaining culture, continuing to empower your people to kind of offer that best-in-class service, live your values, that sort of thing. I always like to ask operations teams on this, particularly because you guys really are at the pointy edge of dealing with end customers and partners. But how have you handled that evolution of growth from an ops point of view within the business?
Transparency is the word I'd use throughout, right? Because you can't pretend you're not human. Mistakes will be made along the way, but when you're growing so quickly, you just have to prioritize in that moment what is the most important thing that we need to focus on now, right? Do that, and then everything else catches up. But I think there's two sides to it. So in terms of maintaining sort of an ethos within the company and things like that, you're never going to get full control of that. You can try and spend millions of pounds on conferences and lighten up the room with buzzwords and saying, this is us, we've got our core values. It will work a percentage, right? But we're humans and we have our own way of thinking. And I don't want people to be in a box and dictated to of what they should think or feel. I don't necessarily agree with that. I want an openness. And if you have core values that you must stick to, yeah, it's a great guide of how you want to operate. But then if you've got people that like have any sort of variation in the mind and think, oh, you're going against the company, when you need an open forum to improve all the time. You know, I run the businesses day to day, every day, and it can be from anything to making sure someone's got a cash drawer, and along the way you're doing all these things which you wouldn't necessarily do in that role, if you know what I mean. But it's good to have your ear to the ground. I mean, for example, we don't have an ethos as such, but my thing is that sales in particular and office work and when you're growing, it's so intense. I know it myself where I'm just like, you get so drained because you're just hammering it, and you just don't get off the wheel sort of thing.
Hustling, right?
Like, it's mad. So there's a company called Soother who are like, we partnered with them recently. They're basically a mental health and wellbeing company where the employer will basically pay a fee and every single staff member has access to counselling. So it's not easy to talk in work, especially when you're so busy. It's like, you think you're wasting somebody's time, or, you know, you might not know who to speak to. You know, might not have a designated person. This way, any of our staff now have access to counselling 24/7, and they can do it in work, they can do it out of work. They just book a slot. They have specific counsellors for what areas you're struggling with, whatever that might be, and you can dip in and out and get that support. Because I'm aware that, you know, there are times when we've all just had to knuckle down in the last year or two where it's been going crazy, and you don't even look up. You don't. Are you all right? Like, you know, you just so tunnel vision, and it's not good for anybody.
Such a good idea.
Really good idea.
Like, sales is, sales gets given a lot of shit. It really does. Like as a career, and you sales guys, so you always get like that sentence does my head in, to be honest. And sales is so much broader than that, but particularly being in field sales, it's a bloody hard job. Like you're not getting fed leads. You know, that bank ecosystem, even in the acquiring world of banks feeding acquirers, and it's like order taking, that hasn't been around for years now in so many ways. You know, everyone's competing with everyone. There's a lot of collaboration that goes on in payments, but ultimately it's a dogfight and it's a stressful job. And I think opening that up to your team is really commendable. We've not really heard anything like that from anyone previously.
Hopefully people do it. I mean, obviously it's a cost, but like not every cost has to have a profit behind it. You know what I mean? So like, you don't need to invest just to try and make money out of it. You know what I mean? And what you will find is that will be more valuable than abiding to a core value. You know, that makes you feel appreciated. And yeah, there is an element of, you know, this is a good thing for us. Aren't we a good company? Of course there is. You know, let's not. But the main purpose is I'm a big advocate for being able to speak openly about how you're feeling, because ultimately, if you do that, you will see better performance. And that's not what the drive is, but that's going to make them feel better and everything's better. These guys, like, if they have a bad day, it's not just them that get affected by it. You know, you'll know it yourself. They get home, I'm drained, I'm not doing well, I feel that. And you feel it on the back, but no one's dead. You know what I mean? It's all right, it's okay. Yeah. Like, that's what sales is. And you just need to be told sometimes, or just be able to talk to somebody to just...
It's hard, isn't it? Because we're in a position, a role where you get so many more no's than you do yeses, and the toll that takes on anybody in a job it does take its toll. So I think it's a great idea that you're able to offer that to employees.
Do you think that kind of Redwood, obviously we talked about the sort of community and sustainability approach of Redwood, and it'd be interesting to get, obviously from a community element, that kind of feels like it fits into that box as well, but there is a big sustainability focus, and obviously you do the utility stuff, you have all these different hats. I mean, how's that sort of slotted into the Easipay world?
It is really weird, because it's almost like they are separate identities, but now it's just us. It's like some people are, some departments of the Redwood Group, some are Easipay, and obviously, as I say, might be changing in the future. But ultimately, it's everybody. If there's a social, there's no, they're Easipay, we're Redwood. You know, we've got two offices, soon to be three, in Blackpool and the Manchester office, and even, you know, the Manchester office and the field and all the different departments, they're about as well connected as they can be. We're not one of these where it's like, right, every month, everyone, let's just do a massive social. We do them probably every quarter, and some they'll have little groups doing their own things, and we encourage it. But it is one family, like it is. And what's nice is that you've got people who've been there from when the Christmas do in 2022 probably had 10, 12 people, and 2023 is like 35, 40. 2024 there's 70. There'll probably be 100 plus at this one. So, and then you've seen people grow through it, and you've had people working there since they're like 16, and then now like, wow, like 19 now, like grown up. It's nice to see. And what we say is try and get it into people, because in certain areas as well, geographically, when you're hiring somebody, their aspirations are so different than somebody in a different place. And we want to say to you, we want to change your life. When you get a job here, all the things you don't think are possible, they are. If you've got a target that you never thought you'd buy a house, let's map it out for 3 years. Invest time in them, and they'll give you the work back. It's not a lot of effort to do that. You say, simplify it for them. Say, if you do A, B, C, D, E, F, like that's where you'll be and when you'll be there. And like, oh, like you're giving them that sort of, stick with us. You'll be looked after completely, because we aren't greedy in any way, shape or form. We want everybody to win. And I think that's what breeds the type of people that we do have, because they feel that like there's no, even within staff, envy. They're just like, we all want to win. That's what we're here for. There's no, it comes back to the transparency. There's nothing translucent. There's nothing hidden. It's just like, we want to
loyalty
do well.
goes both ways.
And that
right?
creates that great internal sort of community for sure. And from a sustainability point of view, though, with payments, it's an interesting angle. I mean, in my head, I'm going to, don't use till rolls, use digital receipts. Like, how does that sustainability play kind of cross over into payments land?
Well, I think, again, customer choice. I think naturally it'll go one way. But if in all honesty, as a broker, as an ISO, you have to accept that you don't really have control anyway. So like, we just roll with it. However it goes, we'll roll with it anyway, because that's all you can do. So, when people say like, have you thought about this 5 years? Have you thought about that? A little bit in every aspect of everything, but I haven't got a crystal ball. So I feel like to be present in the moment and deal with what is there now, that's where the value is.
Is that
I
like
think.
paperless statements, stuff like that? Or, again...
I don't think for a while, really. No, I don't. I mean, how can I say this without sounding horrendous? But it's a bit like checks, right? It's when certain people die, they'll go. Like that's just the way it is.
Generational thing,
It's the
right?
same with coins.
Changes.
I don't want to open the can of worms about physical cash and coins and whatever, but it will all go one way, of course. But I would never have a paper receipt. Yeah. I just wouldn't have one myself. If I do, I'll rip it up. But equally, I don't agree with, I'll send you a text or give us your email. I hate that. It slows the process down.
Just nothing then.
And it's just,
just give me the coffee.
If I've got it, that's it. Obviously depends what it is, and online's simple, that's fine. But I just think it's just a data capture. You want to email a receipt, you just on the marketing, aren't you? You're just like, I don't want that. I've done it before. Someone actually said, I need to take an email for your receipt. Like, I just made something up because I was just like,
just want to get in and out.
Yeah, but no, I don't. I think it'll take a while, but eventually probably will be paperless. But I think a good while, really, because if anybody, these people who desperately want a receipt, mainly nowadays, it's for expenses and things like that, to be frank, isn't it? But I think that most people who are, I would say pedantic enough, but it's not the right word, who want a receipt, they'll probably want it as paper. Yeah. Because that's the type of
work to be done then on the green front, for sure.
Yeah. Cool.
So we hope you've watched the show previously, but the grand finale, the Shelf of Shame. Pete,
yes,
your time is now. What are you going to nominate for us to put on the Shelf of Shame or send you packing with?
I'm going to go back to what we've already discussed and say, I can't just use transparency, but clean statements from merchants, they need to be. So I'm going to put confusing billing that's what I would nominate for the shelf, because there's no need for it. There isn't a need for it.
Yeah, I can't agree more. I think if I go and pick one merchant that uses 5 acquirers and they have the same traffic going through every single acquirer, the statements will all be completely different and they'll be paying different prices, even though if the contractual term that they thought they were signing up to is the same fee.
And ultimately, everyone's singing from the same hymn sheet, right? So everyone has the same interchange fees. You've got your scheme fees, your acquire margin, your ISO margin. Like, the principle's the same. The statements, like you said earlier, they're driven a certain way to
too many ways to skin a cat with that, which there shouldn't be. But I think that PSR have done all this work, right? And the newest thing, which doesn't generally seem that accurate anyway, is they give you that breakdown of the 12 months and all that, right? So they could easily just say, right, as part of the policy, this is how your bills need to look. And it would do miles more good for it than...
Maybe Consumer Duty, the regulation that came in a couple of years ago, should have a play in that.
I think we just need Pete in PSR's next roundtable meeting, to be honest with you, to feed this into them. Not sure how that will go, but...
Lobby it for all the merchants.
Yeah. Normally get my own way, so it would probably happen.
Perfect.
No, there's more to it in that. So above my head, really. But
perfect. Pete, thank you so much for your time today. Really appreciate it.
Thank you, guys.
And we'll see you next time.
Yeah.
Thanks,
Cheers.
Pete.